You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 9th day of April, 2025. Thanks for joining us, whoever you are, wherever you are. We're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first broadcast is our live training room, so that one is reserved for members only and those who are taking their 1-week free trial. If you have not yet taken your 1-week free trial, when Michael joins us in about 50 minutes, he'll walk you through it step by step on the screen. We'll get your indicators up and running today, and you'll get 5 consecutive days with access to everything, not just the live training room. And there's no credit card required. So, stand by. He'll walk you through it in about 50 minutes. Okay? Now, when the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and come back for the afternoon broadcast, this broadcast, which is open to the public. That's everybody, everywhere on planet Earth with an internet-connected device. There's 2 different ways you can join this afternoon broadcast live. The best way, you only have to do it once. Go to mytradingiq.com. Scroll down the page to where it says Noon Broadcast. Click the link. Fill out the 30-second registration form. And you're done. What will happen going forward is every trading day, you'll get an email about an hour before the broadcast starts. In the email, there's a link, so at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. Now, there will be days, of course, you're out of the office, away from the desktop, but you still want to join live. And there'll be days when you're busy, can't join live, but want to get caught up later. Well, you can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN, Christian Financial Radio Network. But you don't have to remember all that. Just remember CFRN because you already have the YouTube part memorized, right? Now, not only do we broadcast live every trading day on our YouTube channel, but we also archive each and every daily broadcast. Currently, there's over 2,700 daily episodes archived for your educational and viewing pleasure. And when you go to the YouTube channel, if you want the most recent episode, then just click the little live tab and it's got them right there for you in chronological order. Now, this is our daily broadcast, or our daily schedule for the afternoon broadcast. So let's get into our daily devotional. We are on day 7 of 10, listening to God. Today's scripture is 1 Peter 5, verses 8 through 11. And I'm going to share it with you from the Message translation. Keep a cool head. Stay alert. The devil is poised to pounce and would like nothing better than to catch you napping. Keep your guard up. You're not the only ones plunged into these hard times. It's the same with Christians all over the world. So keep a firm grip on the faith. The suffering won't last forever. It won't be long before this generous God, who has great plans for us in Christ, eternal and glorious plans they are, will have you put together and on your feet for good. He gets the last word. Yes, he does. Again, 1 Peter 5, verses 8 through 11. So, how do you tell if the voice is God's and not Satan's? People often ask me, when I listen for God to speak after I pray, I sometimes seem to hear two voices. How do I know if I'm hearing from God or the other guy? Now, this is a legitimate question, because the enemy of our souls also attempts to speak to us. We know from Jesus' temptation in the wilderness that Satan will try many tricks to convince us to listen to him instead of God. Study that at Matthew 4, 1 through 11. The Apostle Peter warned us that the enemy is always on the prowl, seeking to instill fear and confusion. That's in 1 Peter 5, 8. We must be on the alert continually to make certain we're hearing God's voice as we pray and listen for God's answer. Peter had been a follower of Jesus from the beginning of his earthly ministry, yet he was likened to the arch enemy himself. After Jesus told his disciples that in Jerusalem he'd suffer many things from the religious authorities, be killed, then raised from death on the third day, Peter took Jesus aside privately and said to him in Matthew 16:22, "God forbid it, Lord. This shall never happen to you." As well-intentioned as Peter may have been, his words were not God's, but were lined up with Satan's message. Jesus turned to Peter and rebuked him, saying, "Get behind me, Satan. You are a stumbling block to me, for you are not setting your mind on God's interest, but man's." Matthew 16:23. As we learn from the example of Peter, sometimes Satan's voice comes to us, not in our thoughts and imaginations, but through the words of other people, some of whom may seem to be well-intentioned. The Bible assures us there's a way to tell Satan's voice from that of our Lord. I believe that we'll hear some distinct differences in the messages. Satan says, do your own thing. Do what you want. If it feels good, do it. Live for the moment. Don't worry about what other people say. You're as mature now as you ever need to be. You're an adult. But the Lord Jesus says, consider the effects of your behavior on others. Live a selfless, giving life. Live with an eye on eternity. Receive godly counsel. Continue to grow and mature and to become more and more like Jesus Christ. Certainly, the outcome is different for us when we follow Satan's voice and message rather than the Lord's. Satan's path always leads to loss, destruction, and death. The Lord's way always leads to abundant and eternal life. John 10:10. As you continue to walk daily with the Father, meditating on His Word and seeking Him in prayer, you'll grow in your ability to discern the voice of God and develop an ear to hear what He's saying to you. You'll come to know His voice unequivocally and immediately, for He is your Father and He calls you by name. Let's pray. Heavenly Father, thank you for being our strength and protector. Help us to stay alert, to resist the enemy, and to stand firm in faith. When we suffer, remind us that we are not alone, and that after we have endured, you will restore, confirm, strengthen, and establish us. To you be the glory forever. It's in Jesus' name we believe and pray. And everybody said, amen. Amen and happy Wednesday. Let me give you the numbers from around the world. Start here in the U.S. with the cash markets, or the indices as they're called. Right now, the Dow is up 166 points. The NASDAQ is up 227. That's roughly 1.5%. S&P 500 is up 33. But the one that gives me concern here, the Russell 2000, our man in the street, is down 26 points. That's 1.5%. So we'll see over the course of this broadcast if the Russell chooses to follow the rest of the pack, or is it getting an early start on a run to the downside. In the commodity basket, crude oil down $2.23, trading 57.35 last. That's a drop of 3.75%. Now, for those of you who drive those fossil fuel vehicles like me, that's good news, right? Because in theory, at some point, however long it takes, that will bring the price at the pump down. Again, in theory. But the oil producers and the wildcatters, they're freaking out. because to be profitable in today's world, you need crude at roughly $70 to $74 a barrel to show a profit. So we have two warring factions here. In fact, I have an article I'll share with you regarding that in a moment. Gold is up $110.50, trading 3,140 last. That is a gain of almost 3.75%. Silver up 59 cents, trading 30.28 last. That's a gain of 2%. In the Asian markets at the close, the Nikkei dropped 1,298 points, 4%. The Shanghai actually gained 41, and for the Shanghai, that's a gain of over 1.25%. The Hang Seng gained 138. In the European markets at the close, FTSE down 231, 3%. The DAX down 609, 3%. The CAC down 237 points, almost 3.5%. So we had a mixed day in Asia, a red day in the UK, and at the moment it is a mixed radio Wednesday here in the US of A. We got the Dow, the NQ, and the S&P well into the green. But that Russell troubling down. Now remember, the Russell represents 2,000 small cap companies. Okay, and who is affected first by any major policy change or problems? It's the little guy, because the big guys, well, they're the big guys. It's just like when there's a food shortage, do the rich go hungry? No. It's the man in the street. So, as was once said long ago, let them eat cake. Or not. All right, in the news today, the U.S. is set to impose 104% tariffs on Chinese goods today, following through on President Donald Trump's trade threats. The escalation comes after China retaliated against the U.S. with a 34% tariff on American products, which was a response to Trump's 34% tariff on all imported Chinese goods, atop an already existing 20% tariff. Last year, bilateral trade between China and the U.S. reached $585 billion, with the U.S. suffering a $295 billion deficit. Now, you don't have to be an economist or a rocket scientist to know that that's not good for the American people. It's very good for the plutocrats. Analysts warn prolonged tensions could disrupt global supply chains. Oh, just go ahead and throw the T in the sea. Get it over with. Goodness. Inflate prices. Destabilize roughly 43% of global GDP represented by both economies. The U.S. will also begin collecting new country-specific tariffs from 85 other trading partners today. Our new Treasury Secretary, Scott Bessent, noted roughly 70 countries have approached the U.S. to begin trade talks after last week's tariff rollout, while Trump has signaled a potential trade deal with South Korea. U.S. markets fell again yesterday. S&P down over 1.5%. The Dow down almost 1%. The Nasdaq down almost 2.25%. With Apple losing its most valuable public company title to Microsoft. Apple is considering shifting its iPhone production to India to offset tariff costs. I don't think that's going to work. But hey, you're Apple. You're certainly welcome to give it a try. A roof collapse at a music venue in Santo Domingo killed at least 98 people and injured more than 160 others early Tuesday. Our hearts and thoughts and prayers are with the families of all those who were killed, and certainly with those who are injured. We wish them a speedy recovery. Authorities have not yet weighed in on the cause of the tragedy, which killed Provincial Governor Nestle Cruz, sister of former MLB power hitter Nelson Cruz, as well as the performer Ruby Perez and his saxophonist. The roof of the Jet Set music venue fell while merengue musician Perez was performing shortly after midnight. An estimated 500 people were in attendance at one of the country's most famous clubs, which is well known for its Monday shows. President Abinader received a call from Nelson Cruz, the governor of the northwestern Monte Cristi province, while she was trapped. She unfortunately later died at a hospital. Rescuers continued to extract people from the rubble throughout the city. Our prayers are with those first responders as well. Other individuals who died in the incident include former Major League Baseball players Octavio Dotel and Tony Blanco. And this one is rich, pun intended. Prince Harry appeared at England's Court of Appeal yesterday to challenge the reduction of his taxpayer-funded security detail. He argued the Royal and VIP Executive Committee's decision to deny him and his family police protection normally granted to royal family members was procedurally unfair and exposed them to security risks during visits to the UK. I think you better worry about security risk here in the U.S. The challenge follows a 2020 ruling by RAVEC, that's a committee including government, law enforcement, and royal representatives, that downgraded Harry's automatic protection to security provided on a case-by-case basis after he decided he didn't want to be Prince Harry. He wanted to go chase Miss Markle. Unbelievable. Harry filed a judicial review in 2021, alleging that RAVEC failed to follow its own protocols, conduct proper risk assessments, or ensure a transparent process. A 2024 High Court ruling upheld RAVEC's decision, but Harry later secured limited appeals rights. The government maintains security is based on risk, not status, and the change in royal duties justified his downgraded protection. I don't think he should have any protection at all. He walked off the job. How many people on this planet would dream of being born a prince? And this guy just walked off the job over some floozy from the TV show Suits. The two-day hearing concludes today, with judges expected to reserve their decision. Either party may seek Supreme Court appeal arguments afterwards. Well, well. Was it worth it, Harry? Treasury Secretary Scott Bessent said today that the chaos in the bond market is really just some very large leveraged players that are experiencing losses, but said it's nothing systemic. He also issued some new warnings to China as a trade war with the U.S. escalated, saying it shouldn't try to devalue its currency and that all policy options are possible. Everything's on the table, he said, while appearing on Mornings with Maria on the Fox Business Network, when asked whether the U.S. could remove Chinese companies from U.S. stock exchanges. And the answer is yes. It's unfortunate, Bessent said, that the Chinese actually don't want to come and negotiate because they are the worst offenders in the international trading system. What Beijing should not do is try to devalue their way out of this. Strategists this week have laid out multiple theories as to why bond yields are soaring this week amid what some are calling a fire sale in treasuries. They range from investors seeking more liquidity within a volatile market to bond traders perhaps feeling more confident that the U.S. economy can avoid a recession. The 10-year yield jumped 17 basis points to kick off the week, a massive 34 basis point swing from a low of 3.87% to a high of 4.21%. The yield extended those gains on Tuesday, climbing nearly 11 basis points to hover at around 4.26%. The surge in Treasury yields is a challenge to Bessent's stated goal of getting borrowing costs down as part of his larger economic plan, which also includes tax cuts and deregulation. It's also raising questions about whether these bonds are in fact a safe haven during the current market chaos. Oh, I love it when the big guys freak out. Freak out. President Trump today attempted to calm some nerves as his controversial tariff policies continue to shake markets with his sweeping reciprocal duties on some 185 countries now officially in effect. Be cool, Trump wrote in a post on his social media platform, Truth Social. Everything's going to work out well. The USA will be bigger and better than ever before. I think he's right. Okay, let's bring it home. Logic 247. That's our 24/7 around the clock Emini alert service. We're currently in week 349 of Logic 247. And over the last 349 weeks, we've issued over 19,300 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on market structure and a simple process we teach all of our passport holders in their one-on-one mentoring sessions. Now this week, since the markets opened Sunday night at 6 p.m. Eastern, up to when Valerie did the recap this morning at 6:45 a.m. Eastern, we've issued a total of 28 alerts, still waiting on the outcome of 3. That gives us 25 actionable alerts, of which 3, or 12%, would have been stopped out, again based on market structure, and that simple process we teach all of our passport holders. Now, every logic alert has an entry price, an initial target, additional targets, and a final trade to target. The purpose of the alerts is to teach you how to read a chart. With each alert, you're given all the important prices, all the important places. Now, all you have to do is take the 30-minute chart that alert was created from and start drawing horizontal lines. And pretty soon, you'll be able to look at a chart of any market in any time frame and instinctively know what the next high probability move is. You'll be able to see where the next major resistance is, the next major support, and in doing so, reveal the windows of opportunity that live between those two important points. If you want to learn how to trade for a living, you're going to have to learn how to read the chart. And unlike a law book or a medical book, there's no words, sentences, paragraphs. It's about how price flows the same across all markets and all time frames. Until you learn that, you'll never learn how to trade. It's kind of that simple. 349 weeks, 19,300 plus alerts. That's a lot. That's a lot. But long before we had Logic 247, we had our original alert service, the concierge trade alerts. They're different in a number of ways. But the logic alerts, they can come out anytime around the clock, 2 a.m. or 2 p.m. Futures trade around the clock. We have traders around the globe. Our day session is their night session, and vice versa. But the CTAs, they don't come out around the clock. They're posted as a static report shortly before or shortly after the Globex Open each evening. Monday night, we got them out 5 minutes ahead of the open. Last night, came out a little bit later. If you're a member or trial member, make sure you read this information and understand it. If you have a question, ask. So, market opened at 6 p.m. Eastern. All alerts are created on the 30-minute chart, both the logic and the CTAs. So, if you call it 9 o'clock, that's 3 hours. That's 6 30-minute candles. At 8:55 p.m. Eastern, all of our members, all of our trial members, had access to all of these targets: the S&P, the Dow, the Russell, crude oil, the NQ, gold, and silver. So let's go take a peek at the chart, as we do every day at this time. All right, here is the S&P. That's the bellwether. Wherever it heads, that's where all the other markets are going to eventually head. Let's see, there we go. Now we're cooking. Okay, now Because we're in a downtrend, these are called reverse fibs. In an uptrend, you draw fibs from the low to the high. But in a downtrend, you draw your fibs from the high to the low. The green line, that's the BBC. It stands for bull-bear cross. When price crosses above the green line, we're bullish and anticipate higher prices. When price crosses below the green line, and as long as it stays below the green line, we anticipate lower prices. Price always reverts to the mean. In our case, the mean is green. It's called the BBC. So when price reverts to the mean from above, the pullback holds more often than not. And when price reverts to the mean from below, the pullback holds more often than not. Okay. Now, the most recent low was put in on April 7th at 48.32. Okay, most recent low. When the market finds support, as it did here, it's going to go look for resistance, which it found at the black step line. Now, intraday, there was resistance, of course, at the 24%, or intra-session, at the 24% reverse fib. We spiked it. We closed just below it. And then yesterday, we spiked right up to the black step line, which we always expect to be resistance, especially when it gets directly above price. Okay. So we ended up with a down close yesterday, but off the low of the session. Here's the open last night. Here's the high of the session, 58.07 and a quarter. Here's the low of the session, 48.71.75. So after a run down that failed to put in a lower low, and that's important, okay? Failure to put in a lower low, so far today, that's bullish, okay? But you'll see that the step line has now dropped to line up with the 24% reverse fib. So what you have here is resistance times 2. And above that, you've got potential resistance at red and falling and the high of yesterday. And then at the 38. Right now, the daily BBC is lined up with the 50% reverse fib. It takes financial commitment for price to rise. In other words, institutional traders, the ones who move price, have to have confidence in the market. Obviously, we're seeing some confidence in the market here. Remember, we had a red candle all the way down to here. And then we got back to the open, and we had a green candle all the way up to here. So we're slightly off the high of the day, well off the low of the day. But looming overhead is major resistance. I encourage that you spend 2 minutes with the daily chart of whatever you're about to trade before you trade it on your smaller time frames. Whether it's futures or stocks or crypto or Forex or ETFs. Number one, you get a free look over the shoulder of the deep pockets that actually move price. Talking about the institutional traders. Because of their account size and the size they trade in, they are in fact the ones who move price. And they look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. So by spending 2 minutes with the daily chart before you start trading, you can see what the deep pockets are up to. Are they bullish? Are they bearish? Are they buying? Are they selling? Okay. Beyond that, and probably even more important, is you're able to identify major areas of support and resistance. Obviously, the next major area for support would be the low of yesterday, the low of today, and then the low of Monday. Okay? But on your smaller time frame, you won't be able to see that. So spend 2 minutes with the daily chart, then go to your smaller time frame, whatever time frame you choose, and take care of business. Get your goal for the day. As I said, all alerts are created on the 30-minute chart, both the Logic 247 alerts and the Concierge Trade alerts. The vertical line separates today, Wednesday, from Tuesday. Back here is Monday. Now, the horizontal lines are the weekly trading zones. They're published every Monday morning at 6:15 a.m. Eastern. We've published the zones for our members every week since December 14th of 2009, a little over 15 years. When price rallies up to a weekly zone, we expect resistance. When price drops to a weekly zone, we expect support until proven otherwise. And that's how it's worked for over 15 years. So this was the opening candle last night. But again, it wasn't until almost 2100 that the targets were published. That's 9 o'clock. They were published at 8:55 p.m. Eastern. Okay. So, regardless of that, when price opened, we consolidated at the zone. Only 3 things happen when price encounters a weekly zone. 70% of the time is consolidation, 20% of the time is rejection, 10% of the time is the slice. So, we opened, we consolidated, red and falling got directly below price. When that happens, it actually becomes support because it's probably on its way to becoming blue and climbing, which is bullish. So support pushed price up to the weekly zone, 49.75/49.76. Okay. And what do we expect when price rallies up to a zone? Resistance until proven otherwise. Resistance will always send the market looking for support, which it found down here at the short target. And if you go look left, you'll find out why that short target is where it is. Support will send the market looking for resistance, which it found at the BBC and the weekly zone, resistance times 2. So that sent price back down to red and falling, which was directly below price, on its way to becoming blue and climbing, which is bullish. So that sent us back up to the zone. We consolidated at the zone, and then we got a leg which took us right into this area right here. Important price, important area. Resistance that sent us back down to support. Now we're above the BBC. We have blue and climbing. But as we look left, we just hit this resistance right here from the previous 30-minute candle. The next major resistance is at the high of this candle, the high of this candle, and then the long target. So we've already hit the short target and we're working our way up to the long target. On the down, here's where we opened. We dropped, red and falling, got directly below price. That's support. That's going to send the market looking for resistance. And when price moves up to a weekly zone, in fact, it spiked up and almost touched the BBC, which again is resistance, till proven otherwise. So this sends us back down. Okay. We don't quite get all the way to the short target. But if you go look left, you'll see where this double, see this is a double bottom right here. Here, here, see? Okay. Now, support, it's going to send the market looking for resistance. We overcame the zone, but right here, we took out this high. We ran into this area right here. You see where the black step line joined red and falling? Okay, right there. And this whole flat area across here. So now we got a double top. Resistance sends the market looking for support, which it found at the zone and the BBC. That's support times 2. So now we're above the BBC and we have blue and climbing, so we anticipate higher prices. I would suggest letting price get up to about 38, call it 38,300. And then you got 400 points at $20 a point up to the long target. But you got to be patient because you want to make sure it can take out this resistance, and this double top resistance. But again, if it gets up to I'm sorry, 38,300, it's 200 points at $20 a point up to the long target. Really, we've just had sort of a sideways kind of day. Leg and a retracement, a leg and a retracement. But the market is attempting to make a turn and head back up. This is called the transition. On the Russell, here's where we open. We dropped. That initial drop, you can see the wick. It poked through red and falling to hit the short target. Support gave us a bounce. Then we ran into resistance here. That sent us back down to the zone. Support. Remember, 70% of the time when you hit the zone, you're going to get consolidation. It can look like this or it can look like this. Okay. 20% of the time rejection, 10% of the time the slice. So from resistance, we go back to support at the zone and the short target. And from support, we go right back to resistance at the weekly zone. Now, these are the zones that were published Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. So from here, we're at 17, we'll call it 1772, up to 1779. That would be 72 to 79. That would be 7 points right there. Now, the high of this candle is 1767. But you want to let it get up to about 72. Make price prove itself. Price is always trying to reach a weekly trading zone. From the moment the markets open Sunday night till they close Friday afternoon. If price is above the BBC, it's trying to get to the zone overhead. If price is below the BBC, it's trying to get to the zone below. Very simple. So beautiful 7-point opportunity up to the zone where you would expect resistance. And should it trade through, then you've got potential resistance here. And then pretty clear sailing up to the long target if it can take out this high, and not just by a tick or two or a point or two. Make it prove itself. 1798, that would be 16 points up to the long target. Only takes 2 points to get your goal for the day. In Q, we opened last night and dropped right to the zone, consolidated, dropped to red and falling. Remember, when it gets directly below price, it's probably going to become support. So we caught a bounce, sort of half-hearted, but this high here, as you can see, is top of this candle right here. So there wasn't quite enough buying interest yet to get us all the way back to the BBC. But price always reverts to the mean. So resistance sends us to support. We hit the zone in the BBC, back it up, make another run. This time we get through. And then this resistance right here, this spot right here, okay, it's market structure. That's that high right there. And the reason for these highs. Now these wicks sticking up, that's bearish. So we should expect it to send price lower. And it did, considerably. Back to the zone below where it consolidated. And then it took another attempt to get to the long target. Made it up to 17,597. Resistance sends us back to support. And now we're back, we're above the BBC. The only issue is the step line is about to cross blue and climbing. Okay? When that happens, we almost always get a retracement back to the BBC. So the question is can we get there beforehand? Now, call it 17,620. 17,620 up to 700. 80 points, $20 a point. I called something else $20 a point a minute ago. That was an error. But if you trade, you know what it is. Crude oil. This was the open. We dropped to the zone where we found support. Support will always send us to resistance. Resistance sends us back to support, which we found right at the target to the tick. Bounces up to red and falling, and then we drop through the short target. And if you go look left on your chart, you'll see the reason. Then we catch a bounce back to the BBC. The pullback holds, and it sends us back down to red and falling, which has got, or blue and climbing, which has gotten directly below price. That's bullish, so that's now taken us back above the BBC. But we've got potential resistance here, here, and here. Now if we can take that out, you got some pretty clear sailing up to the zone. You might run into an issue right here. Okay. Gold. Here's the open. Hit the BBC. Dropped to the short target. Bounced to the long target. Got above the BBC. Made it to the zone. So we had a leg, a retracement, a leg, a retracement. And now a leg that's trying to work its way to the next zone at 31.25. We got one market left, silver, but we'll talk about that when I come back.
Okay.
Michael's going to give us a recap of what happened in the live training room this morning,
Mm-hmm.
and then he may do some live trading on the TradingView platform, and I'll be
Or
back.
making it. Okay. Make an attempt to. I'll try to make an attempt to show you some CR chart stuff too. But I will make an attempt. I won't try to make an attempt. I will make an attempt. I don't know. I can't guarantee how well it's going to come out, but I'll do my best. All right. You should be looking at my charts right now, right?
Dan,
Let
in
me just check.
response to your question, everything you have is in your TradingView indicators. You just got to turn them on.
Yeah, I'll show you
So
how to turn that on in just a
you
minute, Dan.
have them, Dan.
Okay. I'll show you how to turn all that stuff on. It's just turned off. It's all in there. You just don't have it turned on. Okay. Let me think. I was trying to think of where we have a video for that, the actual setup stuff, but I will just show you. All right, so let me get started. Here we go. Good afternoon, everyone. Today is Wednesday, the 9th day of April, 2025. 9th day of April, 2025. If you have not taken a free trial of this, go here to mytradingq.com, click on the purple button right there. There is no credit card required for the trial. Just click on that purple button, and that will bring you to this registration page, where all that we ask for is your name, your email, and your phone number. Down at the bottom, down here, see it says mandatory right here. TradingView is what we use in the room in the morning session. If you want to have charts with us, if you want to have the charts that we're using in the room, you have to give us your TradingView login ID. If you don't have one, click on this to get it. All right, I'm going to take the NinjaTrader stuff off of there because people are still giving us NinjaTrader IDs and they're expecting the stuff that we have in TradingView, and we just don't have it in NinjaTrader. If you want to have the older stuff on Ninja that we have, then you can. The older stuff is what Dan was just referring to, the BBC and the MA1 and stuff like that. Basically, what you're seeing on Dwayne's charts is the older stuff that we have in NinjaTrader. Okay, when Dwayne does his stuff, he's not showing you the the stuff from TradingView. He's showing you stuff from DT Pro. So that's what you get access to. Okay. Again, just click on this to get your TradingView login ID. All right, and let's see. From there, we'll go here to the spreadsheet. We had a pretty good day today. I did a lot of talking again, so I didn't have too many trades, only 27 trades this morning. But if you can read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today it took 3 minutes and 2 trades to get to $1,100. That is with 10 contracts. And we ended up with $1,560 with one contract this morning. Okay, we took 29 ticks on the Russell, 84 ticks on gold, and 46 ticks on the ES. Again, those were all with one contract, those numbers right there. We took a total of 27 trades this morning. So on the month now, we're at $11,832. That is with one contract. Okay, one contract over 5 business days, averaging $2,366 per day per contract. That's our best month yet so far. On the year, we're at 96,120. It's over 58 business days, and we're averaging $1,657 per contract per day on the year. Now that is better than our next level of monthly, I think, right? Last month we had $1,675 almost. It's almost better than our monthly. But either way, if you were to do the 24/20 blueprint and add one contract a month and quit trading when you get the goal for the day, you did everything just like me, you would have only had to trade 8.21 hours so far this year in 2025, 8.21 hours. And you would have $19,832.50 in profit. You'd be on your 4th contract right now because we're in the 4th month. You have $19,832.50 in profit. You'd be averaging $2,413 per hour right now. Okay, pretty good money if you can get it. Now let's get into the actual trades. All right, I traded the ES a little. Let's do the ES first. I traded the ES a little right at the open, but then it started jumping around too much, so I stopped trading the ES. But let's take a look at that one to begin with. I'm gonna have to do the alt back thing on it because this is like what comes after trillion, gajillion, something like that. A whole bunch of bars. Okay, and then I will show you, once I stop scrolling back, I'll show you what you want to see. Okay. There we go. All right. All right, so Dan, let me show you what you want to see. All right, inside the TQU context and inside TQU context PP, the BBC is right here, right? That's the BBC, and this is the MA1. Those are two of the things that you see on Dwayne's charts. The black step line is this one right here. Those three things, that's what you see on Dwayne's charts right there. Okay, those three things right there. All right, now the BBC ribbon is the same thing as the BBC. It just gives you the blue and the red, depending what direction it's going. Okay, and the BBC ribbon is the leading edge of the ribbon. The BBC 3 is the trailing edge of the ribbon. The BBC ribbon is the BBC. It's the leading edge of the ribbon. The BB2 and the BB3 go in between. All right, so just for a little education about the ribbon, the way that it works, the way that the ribbon works is when you can see all four lines in the ribbon, you're trending. When they get crunched up like this, or they start to get crunched up, the trend is near an end and it's starting to get choppy. There was a question the other day about yesterday, I think it might have been yesterday, but about when to switch between, the conservative trade mode where you're just waiting for it to, you're going with the trend, conservative trade with the trend, and the more aggressive trading that I usually do in the morning where I do the divergences. Whenever this ribbon is crunched up, or it starts to get crunched up, that means the trend is slowing down and the market's likely to get choppy. That would be a good spot to switch. It's really a lot of switching around. You don't really want to do that much switching around the styles when you're trading. But like in the morning, you can see if there's long leg lengths, then you're gonna have long flat spots and the overbought and oversold, and the flat spots where you stop out. So if you have short leg lengths and the markets are not really trending strongly, then that's when you want to do divergence type trade setups that I've been doing most of the time. Okay, since this year I've been doing it most of the time. All right, just a little bit of education for you on that front. Now, the trades that we took on the ES, the very first trade right here on the ES, we got 45 ticks on that first trade on the ES. That was a big trade. 45 ticks on the very first trade on the ES, and then the next trade we picked up 16 ticks. Yeah, 16 ticks on the next trade, wherever that is. We didn't trade again for a little while. Then we got 16 ticks here that got us up to 61. The next trade, wherever it is, was a stop out. There it is right there. We stopped out on that, and that brought us down to 46. So that is pretty much where we ended it with the ES today. We just had a few trades on it. I stopped looking at it because it was just bouncing around so much. You see all these candles in here? Like from right here to right here, all those candles are within 1 minute. That's a lot of candles for a minute. So it was bouncing around really wildly, and it was gapping around on the DOM. I'd really rather not trade the DOM when it's like that. Okay. And that was something else that I covered this morning. One of the questions that someone had asked me today was, how do you determine at the beginning what you're going to trade? And so this is what the gold DOM looks like right now. This is what the Russell DOM looks like right now. And let me get up the other two. This is what the ES DOM looks like right now. And this is what the NQ DOM looks like right now. Okay, now the NQ is easy. You can see here in the NQs, you have this much of a spread in between the bid and ask, and you have all these ones and twos in here. So there is no liquidity in the NQ at all. You easily get jumped in this kind of market. And just the fact, you're going to lose between the bid and the ask. All that space between the bid and the ask, it looks like it's about 10 ticks. You're going to lose that on every contract, on every trade that you take, minimum. You probably get a bunch of slippage with it too. So I didn't trade the NQ at all. It's just not tradable right now for these time frames that we're working in. You know, for larger time frames, you could probably trade the NQ, but smaller time frames, no. What I did do this morning was I put up the micro NQ. Now I'm going to try to do something here. Here it is. Duplicate chart. There it is. Okay. So here, I'll put up a micro NQ right beside the regular NQ. Let me just get that going here. And you'll be able to see the difference in the liquidity between the micro and the regular NQ. Here it is right here. MNM, that one. Apply to all, say okay. All right, so this is the regular NQ, and this is the micro NQ. You can see the difference in the liquidity. You can see there's not near as much of a spread in there. And liquidity, you see a lot more 2s and 5s and double digits even up here, where you don't see a single. Well, every now and then you see one single double digit on here. Look at that 124. It's going to go up and hit that number. Probably already did. But you know, somebody that puts on 124 contracts like that, if they put it on at the market, it'd be whatever it takes to add all this up to 124. You know, it'd be like 25, 30 spots to be spread out to. But this is the micro. The micro has more liquidity in it than the regular NQ. All right. If you're going to trade the NQ, I would trade 2 contracts, 3 contracts on the micro, something like that. More contracts on the micro than you would trade on the NQ. The actual liquidity numbers, I think the micro was 4 times the regular NQ as far as liquidity goes. Okay. So keep that in mind when you're trading or thinking about trading the NQ. Now, when you look at the markets and there's a spread in between them, in between the bid and the ask, like especially on the ES, if there's a spread between bid and ask on the ES, you know something's up, because you know the ES is one of the most liquid markets. It is the most liquid market that we trade in on a regular basis, but it's one of those liquid markets out there. Bonds more liquid than the ES, but in here, looking at these two, I traded gold and the Russell today. They're both pretty good markets. There's a spread right here right now, but it wasn't there earlier. And there's a little bit of a spread here on the Russell right now, but that wasn't there earlier either. So those are the markets that I chose to trade today, right? The Russell and the gold primarily. We got what we got there on the ES, and then I didn't trade it again. All right. So what do we end up with on the ES? 46.6. And then I stopped trading it. And let me bring the desk down a little bit. That's better. 46.6 on the ES. Now we'll go to the gold. And on the gold, let's go back to the beginning. Alt and backwards. Hey, Ronnie, I did not stop by to visit. I didn't go to Massachusetts at all. All right. So on the gold, our very first trade right here, we picked up 1 tick on the very first trade. We got 1 tick on the first trade. Then we had to break even. Then we got 4 ticks to get us to 5. Then we got 10 ticks to get us to 15. And then we got 10 more ticks to get us to 25. Then a break even. Then another break even. Then this is gold, right? Yeah. Then 20 ticks to get us to 45. And somewhere in there, we had another 15 tick to get us to 60. And then we stopped out to bring us back down to 45. And then we went from 45 up to 47 and 47 up to 59. Had a break even, went from 59 to 74. And then one more, 74 up to 84 at the very end. That's where we ended it with the gold. Okay. And there were a bunch of opportunities here during the break. Just a bunch of opportunities to trade with the trend, with the gold. And, you know, just long and short, a bunch of them. There's something I want to show to you guys in a minute when I'm done showing you these things here with the Russell. There's another thing I want to show you that I think is worth probably going over again. I think I still have it on my clipboard. Yeah, I do. Okay. So this is going to be the Russell. Let's go back to the beginning on the Russell. All right, we had a pretty good day on the Russell today too, but we had a better day on gold than we did on the Russell. This is where we got the gold for the day. On this trade right here, we had 1 tick on the gold, and we got 20 ticks here on this Russell trade, the very first one. got 20 there, and then 5 more got us to 25, and we had to break even. Then another break even, and then we picked up, oh, we stopped out. I didn't write this one in, whatever that was. And then we stopped out and got us back down to 0. And then we got 30 on that one and 10 on that one to get us to 40. And then we got another 20 there to get us to 60. And then we stopped out again. Yeah, I screwed up the stop out on one of these. I put minus 30 and it was actually minus 15. But so we actually have 15 more than I thought. But anyway, on this one went from 60 down to 45. We stopped out there and we got 9 ticks on that to get us to 54. And then we stopped out again right here at the very end, bring us down to 29. It's actually 15 ticks more than that. So it was 39, 44 ticks is what we ended up with. But as far as the books go, we'll call it right now 29 ticks on the Russell. And there were a bunch more trades in here on the Russell. Now, what we're doing is trading conservatively with the trend. That means you got to be above the YBR taking long trades. And down here in the slingshot, you have to be coming off a full cycle. It's got to come out of the overbought to get into the oversold to be able to take another trade coming out of the oversold. Okay. What I was going to show you, that screenshot or that thing that I had on my clipboard, I had outlined it this morning right here. Right here, I had outlined this morning. See right here how it didn't make it all the way up into the overbought. So you're going to skip this one right here where it comes out of the oversold. You're above the YBR. So you're looking for long trades, for opportunities to go long when it comes out of the oversold. In this case right here, we couldn't do it because we didn't make it up into the overbought. So you want to skip anything that comes after that because that shows weakness in the trend. Okay. So we skipped that and it ended up saving us a stop out right there. It's basically what I was going to show you right here, the same stuff. Right here, where it failed to go up into the overbought right there. You wouldn't take this one right here and you wouldn't take that one right there. Okay. And by not doing that, you would have taken this trade. This would have been an okay trade to take right here. You would have taken that, probably gotten a break even on it. But you would not have taken this one right here, and that would have saved you a stop out. You would not have taken that one right there, and that would have saved you a stop out. Okay. Okay. And so that was what the day was like, right? When you take trades with the trend, conservative trades with the trend, you want to make sure that it's completing the cycle before you get in the trade. It's got to go up to the overbought, then down to the oversold, then up into the overbought, then down to the oversold, then up into the overbought, then down to the oversold. Complete the cycle. All right. That's what you expect out of every one of these. When it comes out of the overbought, you expect to go to the oversold. When it comes out of the oversold, you expect to go to the overbought. If it fails to do that, for whatever reason, it shows weakness in the trend. Okay. If you're in a downtrend like this and it fails to go back up into the overbought, that shows strength in the trend. You get that? When you're in a downtrend and it's not pulling back enough, this stuff right here, when you're in a downtrend and it's not pulling back enough to get into the overbought, that means you're in a pretty strong trend right through here. All right. And you don't get any extra trade setups out of it or anything like that. The next trade setup would have been right here. Right there would have been the next trade setup. Okay. And then you see it went back and forth a little bit in here. So you would have had one right there, just enough to get a break even. Did not put in a lower swing, but did do the complete cycle, came back up and gave you another one right here. That would have been enough to take a little profit. You know, these are 19 range bars, so that went about 20 ticks. So you could take a little profit. Then this one right here did not pull all the way back up, so you don't have another trade. Then this one right here did pull all the way back up, and your next trade would have been right here, right now. Okay. That is the conservative trend trade. So let's step back just a moment and talk about Sierra charts for a minute, okay? Because this is my Sierra DOM right here, right? This is my Sierra DOM. And, you know, I have, what do I have? All these things up, yeah, here. All these things up. Here is the micro NQ Sierra DOM. So let me just show you a couple of things about this DOM, right? First, you see the blue and the red, I mean the green and the red, and that shows the colors and all that. But if I put this thing on here, you do attach trade window to chart, Okay, do attach trading.
Maybe you could
chart.
show people how to actually get Sierra up and running.
Yeah, that's what I'm planning to do. I'm working on that. I'm going to show them the DOM first, and then give them a goal to shoot for, and then I'll tell them how to start from the beginning and get their ID and all that. That is my plan. But this is what the DOM looks like. Okay, when you have the whole DOM set up, this is what it looks like, and you can switch back and forth between sim and live by clicking this right here. See, if I do that, then that becomes a sim account, and if I click that back off, then that becomes a live account. So this is live right here. And the brackets, I'll show you how to set up the brackets. All right, and I'll show you how to get all this stuff so that your charts are set up. All right, when you download the zip file, you have all these things ready for you. And the targets, when you set up a bracket, this is how you do it. You do it in here within the spot right here. And then when you want to set up the quick keys for the number of contracts you're going to trade, you do it right here. Right. So that's just the basic stuff about the DOM. This M right here, it's really inconspicuous, but it's really important. That means menu. And it's in here that you set a whole bunch of things. The confirmation, if you want confirmations or you want to turn off confirmations, anytime you make a change in here, like if I make a change to, let's say if I make a change to this, I think I'll make that like 20. And I come back in here and I go back to main. I think that sets the confirmation up, doesn't it? Oh no, okay. Well, I guess I had to make another change to set the confirmation, but the confirm order modifications turns back on whenever you make a significant change in there. But this is what the DOM looks like. Okay, did I leave that on sim? I didn't really put it on sim. This is what the DOM looks like. So if I wanted to place a trade in here, I have it set up so that my right click does just like the DT Pro DOM used to be. All right, and I can change the bracket around so you can see it a little better. If I do 15 by 25, see my right click has a 15 tick stop right there and a 25 tick target way up here somewhere, way up there. It's a 25 tick target. There it is. That's the target. That's the stop. You can almost see the whole thing. You can spread it out, really well. This is one thing that you couldn't do with let me just do Shift Z. The one thing that you couldn't do, I don't know what I just did, but the one thing that you couldn't do with the CQG charts was spread it out like this. Something just happened here. You see how the markets just got all jumpy. Something just happened with the NQ. But anyway, I just wanted to show you that. That's the goal, is to get to that point. Okay. But before you do anything, the first thing you got to do is go to sierrachart.com, right? sierrachart.com. Go out here to sierrachart.com. You have to create an account. Go in here to create an account. You enter in an email address, right? And then you hit proceed, and you enter in a name, username, and your password. All right. Now that doesn't cost you any money. At that point, you're just creating an account. It doesn't cost you any money to have an account. You're going to need that account name in the future, okay? Because when you get to this point right here, to be logged in, to be totally logged in like this, you're going to need to have your account number, your account name, right? Now, that's step one. You create the account, right? Once you've created the account, then you have to go to the account control panel, right? And in here, you're going to put in your account name and your password and hit login. That's not mine. Mine is CFRN Michael or Michael CFRN. I'm not exactly sure which one it is. I think that's what it is. And I'll see if I remember my password. See if I remember it. Nope, I didn't. Okay, but I think that's the right ID. So it could be this. Is that the right one? That is it. Okay. So I have my stuff on auto. So it automatically gives you a thing that says when it's going to renew, provided that there is sufficient balance, blah, blah, blah. I have it on auto renew, so it automatically fills it up for me. But what you need to get is Service Pack 10. Service Pack 10, that's the one you need, right? It's the integrated standard monthly. It's $36 a month. That's what you need to get. That's the service pack you need to get. All right. So to get that, you go to activate services in here, and you just choose the one that you need in here. Service Pack 10, the integrated standard, the the one that's $36 a month, not the one that's. Well, I mean, you can do it. You get a discount if you do a longer term one, but the $36 a month one, the integrated standard is what you need. Service Pack 10 integrated standard. Okay, that's what you need to get. There's also another thing called the Denali data feed. If you're getting the integrated standard and you're connected to your StoneX account, I don't think you need the Denali. I pay for the Denali anyway, but I don't think you need to. Now, once you do get that, you are going to need to go down here and fill out this form right here. Check that box to fill out that form. You got to do the exchange agreements. This is the same kind of stuff you have to do with TradingView. Whenever you create a TradingView account, you have to go through and agree to all these things, that you're not a professional and all these things, right? It's the same sort of thing. You got to go do all that, but that's the only one that you really have to do, right? This one right here, the CME, CBOC, NYMEX, and COMEX. Do those exchange agreements. Now, once you have that done, then there is a piece that you need to get from.
What about the part where you download the software?
I'll get to that one in a second. Because this is just, well, part of this is,
because
you got to authorize.
I've already created an account. I've already downloaded the software.
Okay.
But when I try to log into the platform, it continually says socket disconnected.
Okay, I'll show you that in a sec. I'm working my way to that. Hang on, let me shut off. Oh, hang on, I did that wrong. Let me make that not always on top. There was something that I actually sent to you the other day, Dwayne, that everybody needs to get, because if you don't do this, this could be part of the problem that you're having. If you don't do this right here, okay, you've already gotten that. You've got your ID all set up.
Yep.
Okay, so your data services is set up, and you got the CQG Web API is your back end.
Chris already enabled me for Sierra charts.
But you got the CQG Web API and data services set.
Chris told me I was good to go.
He doesn't set that up. You have to set that up. But anyway, you go in here. I'll show you that. I'll get to that. Just give me a second. I'm doing this for everybody. You have to do this, right? If you haven't done this part, then just send us an email at support@cfrn.net or support@mytradingiq.com, either one, and I'll send you the link to this right here. Okay, because you have to do this. If you don't do this, then you're not going to be able to connect to your StoneX account. And that, I believe, is probably what you probably did this part, Dwayne. I'm sure you probably did this part of it because I sent you that last week. And Chris probably said you're all set up because there's a switch that they have to flip as well. And they should do it. Whenever you do this part, they should automatically flip that switch, but they don't. So you might have to call them anyway or send an email to GFG, like gold, F like Frank, support@stonex.com and say that you want to use Sierra charts.
And that email address takes you to Chris.
Yep, and that goes to Chris.
So I emailed him, and he said, "You're good to go. I've enabled you for Sierra charts."
Okay. Now, if he's enabled you for the Sierra charts and you downloaded the software and he's enabled you for it, then the step that you probably haven't done is this one coming up right here. No, not there. Sorry. Let me bring it up. It's over here. Here it is. So you're probably hooked up to something else. Do you ever get green up here, Dwayne?
No, I can't log in to the platform.
Okay.
Because
so when you go to File,
it says
you go to File.
No, I can't get that far. When I try to log in to the platform that I downloaded and the account that I created, it said socket disconnected. It pops up an error message, socket disconnected.
Okay, but you are able to get to, like, let me disconnect from here. Okay, you are able to get to this part, right? Something like this at the beginning.
No,
it doesn't have to show any charts. It won't show any charts. It won't have any data connection, but you'll be able to see basically this.
I double click the Sierra icon on my desktop.
Mm-hmm.
And it takes you to the place where you put in your account name and your password. And then you click log in.
This place right here?
No, never gets that far.
Okay, well, that's the problem. You need to get, there's a bunch of different ways to get to that. So why don't we get together and I'll set up your desktop for you.
No.
But
What I think you're missing my point. I double click. I've downloaded the software.
right.
When I double click it, I enter the account name. I enter the password, and that should take me to some kind of something like this.
What account name and password are you entering?
The account name I gave it and the password I gave it.
For Sierra charts?
Yeah.
Or the one that you gave it when I gave you that link? Because those are two different things.
I never used that link. I used the link Chris gave me.
Okay, well, either way, they're two different things. So you're never even getting to the data trade services part. You're not getting to this part right here.
The software won't open. I guess maybe that's the simplest way to say it. The software won't. Downloaded the software.
Okay.
Created the account.
All right. So let's go back out to this Sierra
icon,
chart.
And it won't open the software.
Let's go back out to sierrachart.com. Okay. So here, if you go to software download, and just go in here and download it again. Do the software download, Sierra Chart zip installer, do the download it again, overwrite whatever you got. It's right down here. Okay.
Yeah, I know.
Overwrite whatever you have.
That's where I downloaded it from.
Okay. And overwrite whatever you have. And then the ID. Mine is Michael CFRN. That's my ID.
Yeah, mine's just a win.
Okay. Well, when you log into that, then you have to go to account management. All right. Well, you should actually, when you do that, you should have something that comes up that looks like, hang on, let's see if I can find it.
If you totally closed Sierra Chart right now on your computer, and you wanted to log in, what would you do?
I don't ever have to log in again. It does it all automatically for me.
Okay, but you have to, if you close Sierra Chart.
I did. Now see, this is what I'm trying to bring it here so you can see it. This, you can't see it, but I dragged it over here so you can see it. But the icon that I click on is that little globe, the Sierra Chart globe.
Yep.
That's the thing that I click on.
That's what I click on.
And when I click on that,
I get a pop-up that says socket disconnected.
I get this. It comes with my account name, my password,
and but
it's verifying and doing all this stuff right here. So there's something not connecting there for you. It's not doing that. So there's, in the messages that come up after that, right here, there's probably the problem is printed out in that message, a system notification message. So I'll have to look at what you have going on, because that just opened everything up for me automatically. This is what it looks like for me. It opens up into a different chart book. It's not the normal chart book that I use. And I have to go to File and TIQ chart, and it opens up my new chart book, and there it is. My new chart book all opened up, and just the way I had it a few minutes ago. Okay, here's the DOM I was working with a few minutes ago in the sim mode. So it remembers everything that you do as long as you do it right. And so I guess I'll need to look at your desktop and see what's not going right, because I'm guessing that if you're logged in with the API, you're logged in with the password and all that stuff, then it should open up to something, and it's erroring out on something, and I don't know what. So I can look at it, and I might be able to figure it out for you, but I don't know. I mean, if you send me a screenshot of what happens when you log in, show me a screenshot of all that stuff that's happening when you log in, and I might be able to see right there what's going on. But for everybody else, that's what you do. You get in there, do all those things that I just said, and then you have to go to your data services, come in here to global settings and go to data trade service settings, and this right here.
Send it to you in the boardroom.
Okay. This right here is what you want to get connected to, right? This CQG Web API is what you want to get connected to. Okay. And if I go out here in the boardroom and we'll go up here to the boardroom, there it is. Okay. Press cancel button to modify the account name password if you need to change them. Working offline, socket closed during the connection attempt. It suggests right in here that you might need to modify your account name and password. I can't see what the account name and password is back here, but if that's not coming up right, then that's a problem.
It's just simply Dwayne, my name.
Okay.
I can go to the CQG website and I can log in.
It's not the
But
same.
when, I
It's not
understand,
the same
I
ID and
understand.
password as the CQG website.
But when I downloaded the software, I had to create a username and password for that.
Mm-hmm. Okay. Well, you know what? I can't do it today,
Yeah,
but I will
I'm
look.
sure.
We'll have to get together and we'll look at your desktop. Maybe
Right.
maybe tomorrow at some point.
Okay.
Okay. I've run out of time here now anyway, but
All right.
right, well, I'll get back into this. I'll try to do this again tomorrow. We'll start kind of where I picked up, and hopefully we'll be able to fix Dwayne's before then. All right. Well, let me get back over here for just a second. I didn't take any trades, obviously, in this session, but we were able to cover a little bit of the stuff about the CR setup. And well, that's it. I guess I can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Recap of the morning session.
Today it took 3 minutes and 2 trades to get to $1,100 with 10 contracts.
Good job.
Thank you. Dan has asked, Dan left, how do you get the break even in the contract menu? I'll show him that tomorrow morning. Okay, or I can send it to him in Telegram.
Okay.
All right. That is it for me for now.
All right, guys. The last market that we haven't covered was silver. This is where we opened last night. We did not drop all the way to the short target. Buyers came in, as you can see, red and falling, became blue and climbing. That got us back to the BVC where we consolidated 4 hours and then headed to London Open. We got a pop. It took us up to the long target. We got above the zone and the long target, leg, and a retracement. As you can see, price pulled right back to the zone that was published Monday morning at 6:15 a.m. Eastern, and the market found support. So we get a bounce, we go sideways, we got blue and climbing overhead, we know that's potential resistance, and that sends us back down to support times 2, really support times 3. The BVC, the weekly trading zone, and as you know, when you trade through the long target or through the short target on one of the ensuing pullbacks, like in this case, the target actually becomes support because you've now traded through it. So you get a leg and you get a retracement. The zone holds. So you get another leg, but you put in a lower high. That sends you back to the zone where it once again holds as support. Puts you above the BBC. Now we're above red and falling. So looking left, you can see we've taken out these highs. Okay, we're in the process of doing that. The next obstacle you want to be concerned with is this one right here at comma 3061 half. Okay, 3061 half. Once you've taken that out, you're going to come over here, 3067, and then 3077. You only need 2 pennies to get your goal for the day, so in between any one of those areas, you could have gotten your goal and then some by the day, for the day. Should the market make it today up to 3082, then you've got a beautiful potential for the market to run all the way to the zone overhead at 3125/26. So there you have it. One last look at the daily chart. Nice big green candle. Okay, that's what we were looking for. So where are we headed now? We're above the 38% reverse fib. I pointed out earlier in the broadcast that the daily BBC and the 50% reverse fib were aligned. We're breaking above that 38% reverse fib. Does the market have enough confidence to get us all the way up here? Okay. Now, these are some very big candles. The average daily candle. Let's see what I got this. Which one is this? This one is, this is looking back over 14 candles. Okay. The average daily range from low to highs, 203. Now, if we look back over the last 100 days, it's 97. Okay. So, these are some big candles. Okay. It looks like the market just might have. Now, you got this area right here. Right. See right where that wick is? See how it lines up perfectly with the space between these two candles right here? Okay. So if you can overcome that resistance, then there's absolutely nothing to stop the market visually, obviously, logically. Let it get up to 54.56. And from 54.56 to 55.28. That's about 75 points at $50 a point. Now, it may not do it all today. In fact, because we've had such an aggressive move to the upside, we may get a retracement here. The step line, that's potential support. Or I'm sorry, red and falling, potential support. Below that, the step line, potential support. Then, of course, the 24% reverse fib, potential support. And then you've got the low of yesterday. Okay. The path of least resistance at this point seems to be to the upside. Okay. Now, that's like pushing a rock up a hill because it takes financial commitment for price to rise. All it takes is a lack of buying for price to deteriorate. So this is a very positive sign, even though we've got resistance times 2 here at the 50% reverse fib and the daily BBC. Typically, we hit that area, we get another leg to the downside. Remember, we're in a downtrend. Leg, retracement, leg, retracement, leg, and we're working on the retracement. Now, even though the pullback holds more often than it doesn't, eventually it's going to trade through. So if institutional traders are confident enough, we'll close today near the high of the day, and either overnight, tomorrow, possibly Friday, we run into this resistance times 2. Then the big question will be, are the institutional traders willing to take their positions home over the weekend? Or do they exit, step back, and just wait to see what happens when the markets open Sunday night and then Monday morning on Wall Street? Okay, so there you have it. To become a member, go to mytradingiq.com so you know what you're looking at. Okay, and then if you decide you want to become a member, send an email to support@cfrn.net. In that email, in the subject line, put "I want to become a member." In the body of the email, name, phone number. We're not going to call you, but we will send you an email that explains what it means to become a passport holder. And when you become a passport holder, you have access to everything. 2 hours of live training every trading day in the live training room. That's interactive trading, interactive training. In other words, you're watching live trades in real time with real money while you trade along in your demo account to learn the methodology so that you can qualify to go live. And as you're trading in your demo account, you're asking every possible question that pops into your head. That's the quickest, fastest, best way to learn, okay, in an interactive environment. 2 hours every trading day. 9 out of 10 new traders fail because they don't have anyone to teach them how to do the job. Imagine being hired for any job and they just say, there's your desk, go to work. Well, what am I supposed to do? Well, do your job. Well, I don't even know what my job is. See, that's why the statistics are as horrific as they are. Along with 2 hours of live training every trading day. You have access to private one-on-one mentoring, the strategy you learn, the indicators that you own as a passport holder are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETFs, price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over again and again. It's a never-ending cycle. When you become a passport holder, you'll get the Logic 247 alerts around the clock. You get the concierge trade alerts the second they're published each evening. On Monday mornings at 6:15 a.m. Eastern, you get the weekly trading zones. And once those zones are published on Monday morning, they're carved in stone for the entire week. They don't change in any way whatsoever. You're able to attend the members only workshop on Thursday night because you're now a member as a passport holder. And you get the golden key that opens all the private channels in Telegram. We have public channels for folks on the trial. We have private channels for the members. But once you become a member, then of course you have access to everything. Everything a trader needs. All under one roof. One low price. Okay, let's wrap this up with our good word for the day. Today's good word for the day. Throw it down. Huh? Then the Lord asked him, what is that in your hand? Exodus 4:2. The Bible says that when the Lord asked him, what's that in your hand? Moses replied, a shepherd's staff. Throw it down on the ground, the Lord told him. So Moses threw down the staff, and it turned into a snake. Moses jumped back. Then the Lord told him, reach out and grab its tail. Now, that takes some faith, right? Okay. So Moses reached out and grabbed it, and it turned back into a shepherd's staff in his hand. Exodus 4:2-4. Then God instructed Moses to go back to Egypt and tell Pharaoh to set the children of Israel free. And take your shepherd's staff with you and use it to perform the miraculous signs I have shown you. Exodus 4:17. Moses' shepherd's staff represented his security. It gave him physical security from wild animals. It gave him financial security. His sheep were his financial asset. His staff also identified him as a shepherd. This experience marked the ending of one season in his life and the beginning of another. The staff Moses threw down had been used to tend sheep, but the one he picked up would be used to part the waters of the Red Sea and lead God's people to the promised land. So, is God asking you to throw down that which represents your security and your identity? Don't be afraid. Do it. What you get back will be greater than anything you are asked to give up. The only way you find your new identity is by letting go of your old one. The only way you will find your security in Christ is by throwing down the human securities you cling to. And that's a good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.